Have you been scrolling online lately? Maybe you've seen that question popping up everywhere. It seems like everyone's asking it, whether you're deep into crypto or just kind of
Oh,
curious.
yeah, the why isn't Bitcoin's price going up?
Exactly. Why isn't the price of Bitcoin soaring, even though these huge companies are apparently buying billions of dollars worth every single week? It's it's genuinely confusing people. Yeah.
It really is. And it's a great question.
Well, today, that's exactly what we're going to unpack. We've dug into the sources to figure out what's really going on with Bitcoin and, honestly, the whole crypto market. Okay, let's get into it.
Yeah, and it's important to realize this isn't just about, a price number on a chart. It's about understanding what Bitcoin, the sort of original gangster of crypto, has actually become.
Hmm.
And understanding these dynamics, super valuable for anyone trying to make sense of digital assets today. It's definitely evolved.
It really has. It feels
Yeah.
like a totally new reality for Bitcoin's price. I mean, look at the numbers we found. Bitcoin hit that big all-time high, what was it, $111,840 back on May 22nd.
Right.
But since then, it's pulled back. Now it's trading around like $106,000. Basically, it's just been kind of stuck for the last 6 months.
Stagnating, yeah.
But here's the wild part. While the price is flat, companies are buying like crazy. MicroStrategy, they just picked up another 4,980 Bitcoin. That's about $531.9 million, right around that $106,801 mark per coin.
Wow. Adding to their stack.
And get this, as of late June 2025, MicroStrategy alone holds 597,325 Bitcoin. They spent something like $42.40 billion to get those, averaging around $70,982 per Bitcoin.
That's an incredible amount for one company.
It is. And it's not just them. The top 100 companies, they're OJO dealing, holding on for dear life, nearly 850,000 Bitcoin combined. And just recently, 20 of those companies added another 14,200 Bitcoin to their treasuries.
Okay.
So you see all that buying pressure, all that money flowing in. Logically, you'd think the price should just, well, explode, right?
Absolutely. That's the standard supply and demand thinking. Huge demand increase, price goes up.
But it hasn't. It's just stable, almost weirdly stable. What is going on here?
Yeah, it is really counterintuitive when you first look at it. That expectation for a price surge makes total sense. But the explanation we're seeing is actually pretty simple, but also, quite profound.
Okay.
It boils down to a real shift in how Bitcoin is being used and, maybe more importantly, perceived in the market now. That's what's driving this behavior.
So if it's not about the price shooting up, what is Bitcoin now? What role is it playing? The sources we looked at really hammer this point. It's become digital gold.
Digital gold.
And what that means, practically speaking, is that people, especially these big institutions, they're buying Bitcoin mostly to hold it long term, not for, buying coffee.
Well, transactional.
Exactly. When these big players buy Bitcoin, they often pull it right off the exchanges. They move it into super secure cold storage wallets, basically locking it away.
Taking it out of circulation in a sense.
Right. So that reduces the actively traded supply.
Yeah.
But, and this is the key bit, just taking supply off the table doesn't automatically send prices soaring unless you also have a flood of new speculative buyers rushing in.
Mm-hmm. The demand side of the equation.
And that particular kind of rush, it just hasn't really shown up lately. It connects back to what some financiers have pointed out, like Jim Chanos saying somebody else is selling it.
Right, for every buyer.
There's a seller. And Peter Schiff made a similar point that the sellers are just as motivated to sell at current prices as buyers are to buy. It's like this equilibrium.
That's a perfect way to put it. The digital gold analogy really helps here. Think about physical gold. Tons of it sits in vaults, right?
Yeah.
It's not all flying around being traded constantly. It's a store of value first.
Okay.
So for every motivated institutional buyer wanting Bitcoin for their treasury, there seems to be an equally motivated seller, maybe someone who got in earlier or has different financial goals, who's happy to sell at, say, $106,000.
So it balances out.
Exactly. This balance keeps the price relatively stable, even with these huge buy orders coming in and coins moving to cold storage. It's classic supply and demand, just with this strong long-term holding characteristic influencing things.
Okay, that makes sense for Bitcoin settling into that digital gold role. But what about the rest of the crypto universe? Because while Bitcoin's price is doing this sideways dance, other things are happening. Right.
Oh, absolutely. And this is where it gets really interesting, I think. While Bitcoin's been maturing into this store of value, stablecoins have kind of quietly become the real stars, the workhorses of the crypto world.
Stablecoins.
Right.
So For anyone listening who isn't totally clear, stablecoins are, well, they're different, aren't they?
Very different. They're cryptocurrencies specifically built to hold a steady value. Usually they're pegged one-to-one with a traditional currency, most often the US dollar. Think USDC, USDT, those are the big ones.
And crucially, they're not designed for speculation, right?
Yeah.
You don't buy USDC hoping it'll double in price.
Exactly. Their whole point is stability. You can think of them almost like the Venmo or PayPal of the crypto world.
Okay, I like that.
But with some major advantages, they work globally, 247, and you often don't need a traditional bank account to use them.
And the usage numbers are just staggering, aren't they?
Absolutely exploding. Transaction volumes are now well into the trillions of dollars every year.
Trillions, wow.
And what's really accelerating this now is regulation. There was that recent Genius Act, maybe a bit of a flashy name,
Yeah.
but it provides a clearer regulatory framework. And that's encouraging everyone from, regular folks on Main Street to big Wall Street banks to actually use stablecoins for real-world stuff.
Like what kind of stuff?
Things like daily savings accounts, sending money internationally much faster and cheaper than old systems like SWIFT. It's about moving money efficiently.
Got it. So this is where crypto is really finding that practical, everyday use case.
Precisely. This is where crypto is demonstrating real-world utility, solving actual problems in finance. And Bitcoin, in its current digital gold role, it isn't really the main player in that particular story anymore. What's fascinating here is just seeing that shift, The center of gravity in crypto, at least in terms of daily activity and transactions, has definitely moved towards these utility-focused stablecoins.
Yeah.
They're filling the role, that fast, stable, digital cash role that maybe some people originally thought Bitcoin would fill years ago.
Right, back in the early days.
Exactly. But as Bitcoin evolved into the store of value, stablecoins stepped perfectly into that transactional gap. They're like the essential plumbing for a more efficient global financial system that's being built on crypto rails.
Okay, so that paints a much clearer picture. Bitcoin is the digital vault, stablecoins is the digital cash. But that still leaves that one nagging question. If Bitcoin isn't for spending, and its price isn't really going anywhere fast right now, why are these huge companies still buying it? Billions of dollars worth. What's the end game for them?
Yeah, it's the logical next question, isn't it? And the answer we're seeing is actually quite simple when you frame it right.
Okay.
For these big players, corporations, maybe even some governments down the line, buying Bitcoin now is primarily a hedge.
A hedge, like insurance.
Exactly like insurance. It's a long-term strategic bet against things like inflation or the possibility of traditional currencies losing value over time, devaluation.
So for a company like MicroStrategy, putting Bitcoin on their balance sheet is like buying an insurance policy for their corporate treasury.
That's a great analogy. It's like a secure, digital, globally accessible vault where they can park a portion of their assets, just in case, the traditional financial system hits major turbulence or we see some kind of global economic crisis.
Right, a break glass in case of emergency fund.
Sort of, yeah. It's not necessarily useful for buying groceries today, as we said, but it might be incredibly valuable, maybe even a lifesaver, further down the road if things get rocky globally.
So the demand isn't speculative, hoping for a quick flip. It's defensive.
Precisely. Defensive, strategic, long-term. The market, especially the institutional market, is now treating Bitcoin much more like a reserve asset, like an insurance policy, and less like some high-growth tech stock that's going to the moon tomorrow.
That really reframes how you have to look at it. It's not necessarily failing if the price isn't soaring, it's succeeding in a different role.
That's it, exactly. Understanding that changes how you interpret its market behavior. It's a sign of maturation, of it finding its specific niche in the broader financial ecosystem.
Okay, so putting it all together, what we're really seeing emerge is like two distinct worlds within crypto, based on everything we've discussed.
Yeah, a clear split.
On one side, you've got Bitcoin. It's cemented itself as digital gold. It's a savings vehicle, a long-term hedge against catastrophe, primarily a store of value. Metaphorically, maybe it's like a financial bunker, right? Secure, resilient.
Good metaphor. Safe harbor.
Then, on the other side, you have stablecoins. The USDCs, the USDTs, these are the digital dollars. They're being used every day to send money, make payments, settle transactions globally. They're the engine of crypto's utility.
The transactional layer.
Yeah. So if Bitcoin is the bunker, stablecoins are like the currency being used in the world outside the bunker. And right now, most of the daily hustle and bustle, the real-world activity, that's happening outside powered by those stablecoins.
And if we connect this to the bigger picture, that kind of specialization, that bifurcation, that's actually a really healthy sign for a maturing market. Different assets are finding their specific use cases, their raison d'etre,
Hmm.
which, naturally leads to an important question. How will this ongoing specialization continue to shape the financial world we all operate in?
Right. So recapping our journey here, we started with that viral question: why isn't Bitcoin's price moving despite all the corporate buying?
Yeah.
And hopefully it's much clearer now. We've seen Bitcoin really settle into this digital gold role, a long-term defensive store of value, which is why cautious institutions are buying it like an insurance policy.
Hmm.
And at the same time, stablecoins have absolutely taken off as the practical transactional digital dollars handling trillions and finding real utility. So what does this all mean for you listening right now?
Well, perhaps the key takeaway is to think about how this clear split between a long-term store of value like Bitcoin and an everyday transactional tool like stablecoins might influence your own view on digital assets. How could this distinction shape their potential role in your own financial strategy, or even just how you see them impacting daily life in the future? The world of digital finance is definitely getting more nuanced, more specialized, and understanding these different roles is becoming absolutely crucial.